Let's return to Southern Africa, where Namibia's central bank Namibia's headline inflation came in at a softer 7.7% last month, giving the central bank the room to hold its monetary policy rate unchanged at 7.75%. That's a one-year level. Let's get some facts behind the rate decisions from the Governor, Johannes Gawazap.
The Monetary Policy Committee of the Bank of Namibia has decided to keep the repo rate unchanged at 7.75%. This was done following a review of global, domestic, and international operations and developments. We've decided to keep the rate unchanged to continue safeguarding the peg between the Namibia dollar and the South African rand while supporting the domestic economy. Let's consider the domestic developments that influenced that decision. Domestic economic activity remained firm in 2023 and during the early months of 2024. Inflation continued to ease while the growth in private sector credit extension remained weak. The merchandise trade deficit narrowed and the stock of international reserves remained sufficient to support the currency peg and meet the country's international financial obligations. Real gross domestic product registered a slower yet firm growth rate of 4.2% in 2023 compared to 5.3% recorded in 2022. The slowdown reflected weaker growth in the primary and secondary industries, especially in the agriculture and construction sectors, as well as the diamond mining subsector. Meanwhile, economic activity was sustained by the tertiary industry, whose growth rate edged higher during 2023. For the early months of 2024, economic indicators suggest that domestic economic activity increased further during this period, mainly observed in mining, electricity generation, tourism, and wholesale and retail trade sectors. For 2024 as a whole, gross domestic product growth is projected to moderate to 3.7% on account of the anticipated slower growth in the primary industry. Risks to the domestic economic outlook have remained broadly unchanged since the previous MPC meeting, although the conflict in the Middle East has escalated notably. External risks continue to reflect the prolonged tight global monetary policy stance, disruptive geopolitical tensions, and geoeconomic fragmentation. Internally, adverse risks mainly include uncertain rainfall patterns and water supply constraints and interruptions, particularly at the coastal towns. Domestic inflationary pressures eased further since the previous MPC meeting. Overall inflation slowed to an average of 5% during the first quarter of 2024, from an average of 7% during the same period in 2023. The deceleration was predominantly driven by food and transport price inflation. Likewise, inflation decelerated to 4.5% in March 2024, relative to the 5.4% for January 2024 reported at the previous MPC meeting. Looking ahead, inflation is anticipated to slow down to 4.9% in 2024. That is 0.1 percentage point above the projection given at the last MPC meeting. The slight upward adjustment is on account of persistent geopolitical tensions, which could potentially include or induce speculative spikes in oil prices and uncertain rainfall conditions. Annual growth in private sector credit extension moderated to only 1.7% in February 2024 from the 1.9% for December 2023, which was reported at the previous MPC meeting. Similarly, private sector credit extension growth slowed to an average of 2% during the first 2 months of 2024, compared to 2.8% in the corresponding period in 2023. This was on account of lower credit demand by households, particularly in the categories of mortgages and other loans, advances and overdrafts. Namibia's merchandise trade deficit narrowed to 5 billion Namibian dollars during the first 2 months of 2024, which is 19.2% below its level in the same period of 2023, as export earnings surged while import payments fell. The higher export earnings were mainly observed in mineral exports, particularly uranium and gold, which were supported by increased volumes exported and the exchange rate depreciation. Meanwhile, the decline in import payments was mainly due to lower imports of mineral fuels. The stock of international reserves was lower at 54.3 billion Namibia dollars as at the 31st of March 2024, relative to the revised 55.8 billion Namibian dollars on 31st of January 2024. The decrease was attributed to net commercial bank outflows and government foreign payments. At this level, the international reserves stock is estimated to cover 3.8 months of imports. This remains sufficient to sustain the currency peg between the Namibia dollar and the South African rand while meeting the country's international financial obligations. The import cover, excluding hydrocarbon exploration-related imports, however, stood higher at 4.3 months. Let's consider what's happening globally. Global output maintained positive growth in the fourth quarter of 2023, and it is projected to remain resilient in 2024. Some inflationary pressures persisted in both the advanced economies and the emerging market and developing economies. Most monitored central banks kept the policy rates unchanged since the previous MPC meeting. The global economy maintained positive momentum during the fourth quarter of 2023, while the Group of 20, also known as G20 economies, registering a growth rate of 3.2%, slightly above the 3% recorded in the preceding quarter. The improvement was largely attributed to stronger performances in the United States and India. For 2023 as a whole, global growth came to 3.2%, slightly below the 3.5% recorded in 2022, partly due to restrictive monetary policies and the disruptive impact of geopolitical tensions. Going forward, the IMF projects the global economy to grow at the same pace of 3.2% in 2024. That is 0.1 percentage point upward revision from the previous MPC meeting. Prices of most key commodities increased since the last MPC meeting. Accordingly, the price of gold increased to record high levels, most recently supported by safe haven purchases. Likewise, the uranium spot price remained high compared to a year ago, reflecting sustained long-term fundamentals related to strong demand for cleaner, safer and more secure energy, despite receding somewhat from its January 2024 high.